Money Arata. There are two scenarios in the economy that are very bad for your finances. The first one is the scenario of economic stagnation. A stagnant economy is an economy that basically doesn't grow. And without economic growth, jobs are not generated, the country doesn't develop, investments are just not profitable. Now, the second one is the inflation scenario. Inflation is the increase in prices for different types of reasons. For example, inefficiencies in the production chain, in the distribution chain. However, our emphasis is on monetary inflation, on increasing the monetary base in circulation. The problem of inflation is that inflation robs your purchasing power, makes your salary able to buy less and less. These two scenarios alone are pretty bad for your finances, but nothing is so bad it can't get even worse. From time to time, the economy experiences the worst of both worlds. It is stagflation. Stagflation was a term coined in 1965 by British politician Iain Macleod to describe this scenario that brings together economic stagnation and price inflation all at the same time. Unfortunately, the world can enter an era of stagflation right now, and you need to be very careful if you want to protect your money. Please note, this is not financial advice. Read the disclaimer before proceeding. Currencies manipulated by governments, the pandemic, and war have created the perfect conditions for stagflation. A stagflation scenario doesn't happen by chance or overnight. It takes a series of events to bring together the economic stagnation and inflation. In the current scenario, it can be said that the conditions began to appear over there in the economic crisis of 2008. The crisis marked the return of greater interventionism in the economy, with governments printing a lot of money to help dealing with the general crash that was going on. Whenever governments are printing money, that means an increase in the monetary base. With more money in circulation, the currency is diluted because of the excess supply. Put that way, it might sound a little bit complicated, but basically it is the law of supply and demand. If demand is maintained, the greater the supply of a good in the market, the less value it has. This scenario got a lot worse when the pandemic broke out in 2020. And once again, to prevent many companies from going bankrupt, governments around the world started to offer many fiscal and monetary stimuli. It was an unprecedented injection of cash into the economy. Well, with more money in circulation, demand for products and services has increased. However, as companies were unable to function properly because of all the restrictions of the pandemic, the supply decreased. The inefficiency of production and distribution generated by the pandemic caused an increase in prices, a large increase, mainly in basic products, the so-called commodities, oil, grains, metals, ores, and other raw materials. 2 years later, with the health crisis under control, it looked like the scenario could improve. But then the war in Ukraine came and the situation got even worse. Russia is one of the world's largest producers of commodities, including agricultural products and energy. Ukraine is also strong in some commodities such as wheat and corn. See, with both of them out of the market, either because of sanctions or because of the war, the supply of commodities has worsened even further. We're not even going to be talking here about the energy crisis, which could be a whole separate episode. With the pandemic and war and crisis in production and distribution chains, many economies have stagnated. They stopped growing. Meanwhile, prices continue to rise, creating the stagflation condition that can put your money at risk. Learn from past mistakes to protect your money from stagflation. The current scenario is not unprecedented. You can learn from past mistakes if you want to protect your money in such a such a difficult economic environment. A well-known case of stagflation happened in the 1970s with the oil crisis. At that time, oil-producing countries formed a cartel and decided to reduce the offer. The decrease in supply has led to a huge increase in the price of oil, affecting the economy of the entire world. As oil is used for so many things, from fuel to plastic production, tight supply has prevented many economies from continuing to grow. The stagflation of that time left a few lessons for us. One lesson was about the risks of countries being so dependent on oil from just a few producers. This lesson seems to have been quickly forgotten now with our current energy crisis. Another lesson was about the importance of investing in assets that wouldn't suffer so much in such a stagflation scenario, in which assets act as a safe haven. To protect yourself from both economic stagnation and price inflation, there are just a few options. In the stagflation of the 1970s, gold was the best option. Today, in addition to gold, you have two other options. The first is to invest in a basket of commodities that would offer you some protection against inflation. That would be composed of oil, grains, metals, or other raw materials. There are commodity ETFs, but they usually lose to the general stock index when you look at the most recent historical charts because still there is a lot of speculation going on the stock market. The other option is to invest in Bitcoin. Like gold, Bitcoin is a scarce asset that tends to appreciate in value over time as long as demand is also rising. In the short term, you will find many occasions in which Bitcoin has devalued more than the stock market. Now, in the long term, taking into account the programmed scarcity, and if demand is increasing, the tendency is for Bitcoin to appreciate, protecting your assets both from inflation and also from the mistakes, the decisions from the authorities that are centralizing the control of the money created by the governments, the fiat money. Protecting your wealth in a stagflation scenario is very important because of a real danger, the danger of unemployment. In a scenario of economic stagflation, companies don't grow. With the prices rising, many of them need to cut costs and end up laying off workers. Now imagine if you lose your main source of income just when prices are rising rapidly. That is why knowing how to invest, what to invest in such a scenario is so important. If you're not investing for growing your wealth, well, you have to protect yourself in case of extreme cases like these ones and also losing a job. It doesn't matter where you live. The tendency for stagflation is to affect the entire world. You may be thinking that your money is not so much at risk. Now, the problem is that the commodity market is international. When a supply shock occurs in one country, it affects all countries in the world, even those who don't buy directly from that country that stopped producing. Many countries are already suffering from high rates of inflation, including the United States, Argentina, Brazil, and many other countries of the European Union. To try to contain the rise in prices, many of them are raising the economy's basic interest rates. So they can see they can fight on the demand side and thus curb inflation. The logic of raising the interest rates to fight inflation is very old and is very simple. The government raises the interest rates, and as a result, bonds, fixed income investments, nominally will yield more. Therefore, it is more interesting for investors to keep their money in a low risk investment that is paying well than to be spending that money or investing in more risky assets. Now, with less money in circulation, the demand for products and services declines. Here we have the law of supply and demand coming into play. With less demand, as long as the supply is the same, we have lower prices. We can fight inflation like that. Now the problem is with this very simple solution is that less money will actually be used in businesses, investments in companies, and in job creation. The side effect is that the economy will not grow. That will only worsen the scenario of the economic stagnation. While there is no easy way out, the current scenario is very challenging and you need to be careful not to be losing your purchasing power because of inflation. If you do nothing, you just let your money sit still, you can still lose part of your net worth because inflation is 10% a year or even more. If you do something and you invest in the wrong assets, you can see it damage even worse. Therefore, you have to study the economic cycles and see that after great periods of prosperity, there are also moments of crisis. And the crisis will not last forever. This helps you to understand what is the ideal time horizon for you to be managing your investments. In the Diamond Hands training, we will do activities for you to identify your investor profile and use these cycles in your favor. Economic stagnation is bad for your finances. Price inflation is bad for your finances. And there is not much that you can do individually to be fighting to avoid stagflation. But what you can do, what you should do, is to protect your wealth against the effects of losing purchasing power, and also to have a reserve in case you lose your main source of income. Among the asset protection options, one of the most interesting is Bitcoin. But you cannot just go blindly investing in Bitcoin without knowing what you're doing. Otherwise, you can also lose a lot of money overnight. That's why I invite you now to take a look at our Diamond Hands training. In this course, you will learn everything you need to know to invest in Bitcoin and thus protect your assets even in the worst possible scenario. To learn more about the Diamond Hands training, you can go to arata.se/Diamond Hands right now.